Hey everyone, welcome to this month's Proclinic webinar. We're going to get started in just a minute, but before we do, some housekeeping. This webinar will be recorded in case you want to go back and watch it again. If you miss any of it or want to send it to a coworker, feel free to do that. We always offer these free of charge to customers and non-customers alike. Secondly, if you have questions, put those in the Q&A tool in your Zoom toolbar. Go ahead and open that up, and we'll do live Q&A at the end. So this month we got a really special one. Our mission at Interstate Batteries is to glorify God and enrich lives as we deliver the most trustworthy source of power to the world. One way we do that is through batteries, right? Another way we do that is by making a positive impact on your business through things like training, like Proclinic webinars. So that's what we're doing today. And normally we're talking batteries, but today we are talking finances with JJ the CPA. What's great about JJ is he boils it down, makes it really simple to understand, because honestly, this is the most uncomfortable I've been on a webinar since we've been doing this. So without further ado, let me introduce JJ and thank him for being here.
Hey, well, thanks for having me. Great to be here. I appreciate it.
I also want to introduce my good friend John Carswell here, best friend since first grade. Brought him along. He has nothing to do with batteries whatsoever, but he is a small to mid-sized business. Would you say mid-sized now? Originally small business
Probably
owner?
mid-sized. We had sales at
Yeah.
2.5 million last year, so
That's pretty good. That's pretty good.
The
Yeah.
upper size of a small business.
I'm not going to call that small for sure. But the reason I asked him to join us is he actually introduced me to JJ the CPA. John, tell us a little bit about your background with JJ.
Yeah, so like I said, Becky and I, my wife and I, run a small business, and
Mid-size.
mid-sized business. Okay. We do have 18 vehicles out there running on Interstate batteries, so I wouldn't say I don't have anything to do with Interstate batteries.
Okay. Good,
Yeah,
good.
I love it. I love it.
You know, we own a window cleaning business, fish window cleaning. We're actually a national franchise, and so there's some beauty in franchising because our franchisor kind of gives us a business plan, you know, which is such a huge help for somebody going into business. We kind of found ourselves at the beginning of the pandemic. We were kind of considered essential, but our customers are restaurants and retail, so all of our customers closed, and we went from doing $25,000 a week to $200 a week, and just saw our business disappear in front of our eyes, and we're struggling to figure out how we're going to keep things around, and we started hearing the rumors of this government program or that government program, and my wife's reading everything she can find because she's a reader. I'm not a reader, and so I started looking at videos for somebody to explain what's going on, and I found JJ's videos, and I've never met a CPA quite like him. And and it was just this wonderful guide of, here's the program, here's why you qualify, here's how you do the paperwork, here's where you send it, and
it was very timely, right?
It was absolutely timely. It was right when we needed it.
I mean, but even you were up at midnight watching,
Right.
posting videos, right?
Yeah, he would see, Congress passed this law, and here it is, and here's how it affects you. Yeah, and so we would constantly have an updated information, and we're able to get the support we needed, and we were able to even share a lot of your videos with the other franchisees, and really a lot of us just found a lot of help out there when there was so much uncertainty. Here's somebody that can explain it to you. And so we started following you through that process, and our company survived and has flourished on the back end.
Awesome. Yeah, that's awesome.
And so, we appreciate you being there.
Oh, well, it's great to meet you, my friend. Yeah.
Same here.
So we're going to talk today about using finances as a tool, leveraging that, and it's not just a bunch of expenses and income. It's how do you use this as a long-term tool to grow your business. So JJ, what would you say is the number one thing that people need to know?
Well, I think it's not being afraid to say you're not an expert in accounting and in your numbers, meaning small business owners are an expert in what they know.
Right.
Most have a passion for something, they get good at it, they want to do more of it, so they blossom into a business. And as you were saying earlier, there's a difference between that and then also being a business owner. So all of a sudden you're thrust into two roles and you have all these responsibilities. So go to somebody that's going to help you understand your numbers, because that's what's most key, is knowing your numbers.
What do you think keeps people from doing that?
Well, I think from a small business standpoint, because I'm a small business owner myself, been doing this 30 years, and with that, a small business owner, every single one of us, right, you need to in your own mind many times think you've got to have an answer for everything. You must know everything. And so with that being said, most would say, well, to grow my business, I got to have a good team. I got to have the expert in this area for either doing diagnostics or going out and providing the service or following up with the customer or just somebody that can answer the phone, right?
Right.
So a business owner has no problem doing that, but many times the business owner is not able to really see that it's okay for them to say they're not an expert in that. But with that, you got to find an expert that's actually going to help you sift your fingers through your numbers, because no one's going to actually know your numbers better than you, because even an expert you bring in like me, well, I'm not in your business every day. I don't know who your customers are, who your employees are. So you have to be a business owner that's more interested in your numbers than even your expert. Your expert is there to help you learn your own numbers.
Right. So, John, you've mentioned how watching his videos and just keeping up with him, and make sure you subscribe on YouTube.
Oh, thank you.
All
JJ
the social
the CPA,
channels.
by the way.
JJthecpa.com. Check out the book on Amazon.
Well, thank you.
We'll talk more about that in a minute. But you've been a fan for a couple of years now. How has that shaped the way you view finances? Like, what's different now than it was before this?
You know, I think like a lot of small businesses, business owners, you know, we start off, like you said, we're an expert in that field, and we're grinding, and we're customer service, and how do I get these employees, and
Sales.
you know, how do I get some more sales, you know, and then you take a look at your bank account every once in a while and say, okay, well, that looks okay, and you really don't have the time, because, you know, one of the reasons I really wanted to do this today was to say, you know, we've got to stop and talk about money for a little bit, right? We talk about customer service all the time, and employee retention all the time, and most small business seminars that you're going to see cover those, and people seem to be scared to talk about money. A lot of times it's because we don't understand it. I felt like I went from a business manager to a business owner one day when my banker came to me and said, you need this line of credit. And I was like, I don't need any more debt. Debt's bad. We know this, right? This is what we've been taught our whole lives. Debt's bad. And my banker explained to me that if I had a job that was a $40,000 job, what would it cost you to do that? I said, well, our payroll runs about 50%, so it would cost me $20,000 to do that job. She says, do you have $20,000? No, I don't. So would you just pass on that job? Well, I would kind of have to, right? Well, how are you going to grow your business when you're passing on these opportunities? And that's where kind of my eyes opened up and said, oh, wait a second, I'm a business owner here. Yes, I need to be a professional at cleaning windows and know all about how to clean windows, but I've also got to operate this business. So that takes you to a whole different level. And you know, the more that you're, especially getting started, and your time's consumed with the customers and the customer service, the more you need that professional on the back end that can really help you sort through those numbers and teach you, you know, your fixed cost from your variable costs.
Yeah.
Teach you the tax implications so that you know, hey, if I'm going to spend this money over here, what is that going to mean for me at the end of the year? Teach you how to budget and how to plan. You know, again, if you're a great mechanic, they don't teach you that in auto mechanic school, right?
Right.
And so you need that help.
Yeah, absolutely.
So it's just so great to have somebody, you know, especially with you. You've got so many videos out there. So when I've got a topic in my head, I can search you.
Thank you. Yeah, thank you.
What about the people that don't own a business but want to own a business in the future? What can they be doing now?
Yeah, great question. So before anybody would drive a truck, before anybody would start to be a mechanic or know how to fix anything, what did we do? We started reading about it, watching videos, immersing ourselves so that we could be familiar with whatever it is, just the same as I went to school to learn about accounting. Then start getting yourself familiar. How? Just what you said. If you're a reader, there's lots of things you can read about this. Google how to be a business owner, steps to becoming a business owner, or watching videos. And with that being said, also talking with other business owners, you know, even if you run your own household and you've got a bank account, like you're familiar with a bank statement.
Right.
Money in, money out, where did it go? Financial statements are nothing but those same numbers, but in a specific order. income, expenses, assets, liabilities, that's it. So then what's key is either as a small business owner or as somebody that wants to start one, you have to look and go, I'm going to give myself permission to make some money here to take care of my family. So how much do I need to make? What are my fixed costs? Because fixed costs are those that you're going to have to spend money on regardless if you have a job or a customer. And then what are your variable costs? These would be costs that you wouldn't have otherwise except for that job. So for somebody that's a driver, well, what's your fixed cost? Well, I got to make my car payment. What would be a variable cost? Gasoline in the truck, right? So if I'm not driving, I don't need gasoline, but whether I'm driving or not, I've got that cost. So what do I need to make? Then how much do I need to make to also cover my fixed costs? And then if I get a job, what's that percentage that's going to go to the variable cost to know what do I need to bring in? So now you would know, here's what we need to charge.
So get that foundation, have an understanding of that now, start to develop that learning now. So you talked a little bit earlier about the differences between a bookkeeper, a tax preparation expert, and a financial advisor. Can you go into that?
The difference between a bookkeeper and a CPA, an EA, or a financial advisor is your bookkeeper's helping you in basically the minutia, the details of it. Your tax advisor, which can be somebody that's just very experienced, or an EA, enrolled agent, or a CPA, they're going to help you with what you talked about, probably the number one expense for small business owners that they don't consider, which is paying taxes on whatever your net income is. Then a financial advisor typically is going to be somebody that helps you with the long term. It's going to help you with after you know your numbers, after you know your taxes. Then a financial advisor goes, okay, here's what we can do for your kids, your education, for the long term. And so with that, all comes back to what is their experience level and what's their interest in your business. Kind of business.
Right, okay. And you mentioned, let's start with, what would you say is the most important of those three? Or is it more like a stage of your business sort of?
Yeah, I would probably say that you want to make sure, of course, you have somebody that's really knowledgeable in tax and in your area, because of what I said, it's a number one expense. And John was talking about, being familiar with the tax laws. And so if you're buying a vehicle, what's the deduction for that? So it's not only an expense, so to speak, but it could be a tool for other things in your business, but also it's going to save you on taxes. So definitely key there, but that might be someone that you're just dealing with maybe 3 or 4, maybe 5 times a year. With that, though, having good numbers is then reliant on a bookkeeper. It's not even necessarily relying on the software. It's relying on somebody that's going to understand how to take those numbers off that bank statement and put it in this category for you, which is very simple. Everybody knows what income is, right? It's the deposits. There's income. Everybody should know what a variable cost is. It's just, I wouldn't have this cost except if I have this sale. So it goes in the cost of goods sold. Here's an expense that is my fixed cost, so it goes to there, so that you're able to look at your numbers. But having a good bookkeeper is going to allow you to have those numbers. So just as John said, when he's talking with his banker, who's a banker who clearly was working with that type of industry. Now, they may not have a lot of other window businesses in your case that's a customer of theirs, but they clearly had plenty of small businesses that were similar to you. But so if you don't know your numbers, you don't know your business from that standpoint. And so with a bookkeeper, it's just key, and then having somebody that's actually going to help you interpret those numbers. So
what's the most important thing to look for in a bookkeeper? What's the most important attribute?
Probably, again, it would be their response time, and then after that, it would be their experience. And so one of the things I indicate is that, first of all, getting a good referral, who do you know and who do they work with? And with that being said, well, how many years have you been doing this? That's pretty clear. What percentage of the businesses that you work with or in my type of business is important? But then relatable. And when I sit with a new client, I would spend a lot of time asking them more questions about their business and less what I can do for them per se.
Right, yeah.
So the more I understand them, the more I can help them understand their numbers.
Yeah, so they're invested and objective. You mentioned being objective. A lot of people will have their spouse or somebody not busy in the office
Yeah.
doing it, and that's probably not a best practice, right?
Well, yeah, and you want to, when we say the most important, helping you to understand your numbers, then you want to have somebody, first of all, that can understand how those things are supposed to fit together. This isn't just putting numbers into a program.
Right.
This is going to be with somebody that, when you say objective, that they're not emotionally tied to those numbers. And so having somebody that's just not that busy in the office do it, probably doesn't have any experience. So those numbers are only going to be as good as they know to input. And then many times when you have a spouse involved, now it might be different if the spouse is in the business, they have an accounting background, a business background, spouse that's in the business. But basically a lot of small business owners go, hey, this is an expense, here's a way we could save money. My spouse, maybe you could do the books, even though you're not involved in the business, you don't have an accounting background, maybe you're working full time. But with that being said, that spouse is probably going to be emotionally tied to those numbers. What do I mean by that? Well, where those numbers are going, the expenses that they're going towards, if they're not involved in the business, then they're not going to help you interpret them. See, that's more what it's about. So don't see bookkeeping per se as an expense. Look at it as an investment to doing what? Understanding your numbers. It's not just an exercise you go through once a month.
Yeah.
Well, I think, in my business, I do my own day-to-day bookkeeping. And I do have an accountant. I was telling you all earlier, I found mine out of the Yellow Pages 20 years ago, before Google was a thing. I remember I'm not a technology guy, so, tax season, I showed up at his doorstep and I said, here's my paper ledger. Still have that paper ledger. I just, somewhere in the office there. And he kind of laughed at me and said, we're going to teach you how to do QuickBooks, and we're going to get you up to speed on some different things. But
you got some coaching.
I got some coaching there. I got some professional help, because I know I failed out of accounting into management. So I know I have some limitations in understanding accounting and the difference between an asset and an expense. And, to this day, I could probably use some help understanding the balance sheet, right? Income statement, pretty good on that, But there's a lot of different stuff like that a lot of small business owners don't understand. And when you don't understand the books, we were talking about this earlier, fast forward, how do I know what to charge if I don't know what my expenses are, right?
Yeah.
And you really need to be able to sit down and know your business inside and out. And if I'm a mechanic and I'm fixing cars, I'm not looking at the business. So I need an advisor to come along and say, I've looked at your books, explain to me why you're paying so much in, whatever it is. If it's in payroll, or maybe it's like, let's talk about your phone bill. Do you really need 15 lines coming in, and paying $1,000 a month? And I don't know. That's what the phone guy told me I needed, so I bought it. Well, do you have 15 people answering the phone?
Yeah.
No, I kind of answered myself on my cell phone. Well, maybe let's control this and think about this, And
they probably have the benefit of seeing other businesses.
Sure.
Not that they're going to share details, but they can see something that you may not notice as a problem.
They can see this expense is way out of whack here. Let's try to bring that back in and help you understand, because the first couple of years of a small business, you're just grinding in customer service and trying to get employees and which way is it going, and you don't have time to sit back and really think about money in your business, right? And how am I moving this money around? And so I know I really felt like I went from almost a business manager to a business owner when I started to understand this relationship with money and business.
So JJ, when you're working with a customer at first, or somebody that hasn't had the experience of working with a financial advisor, how do you help shape their vision of their finances? Like what John's just saying, like how do you map that out for them?
Yeah. Well, the biggest thing that gets somebody interested in their business and their numbers is what I would say is you want it to be around. You want it to continue.
Right.
Most entrepreneurs will work 60 hours a week so they don't have a 40-hour-a-week job. And they want it to continue. And to continue, you have to know your numbers. What does that mean? Everything that you were just talking about. You got to know the relationship between how much money am I bringing in. That seems the most key, but how much money do I need to make to continue to do this, to take care of my family? How much money do I need to make to cover my fixed costs? And then as I grow, what do I got to make to cover my cost of goods sold? So when somebody's first starting out, they'll focus in on what you were saying at the beginning, customer service and the sales and the bringing in. Absolutely, that is the most key, because none of this turns without customers and the sales. But in terms of, well, what do I need to charge, right? Many just, or, well, this person's charging that, or
Here's the going rate,
Yeah, the going rate. And many also think, well, if I'm cheaper, I'll get customers that way. And maybe that's all true. But at some point, to be a business owner, not just a solo act that's getting paid and has very low costs, the way that you now indicate all the people that you have, is really defining what it is that you need to make to then know, well, then on that, here's the taxes that you're going to owe. Because once you get comfortable with that, okay, then everything else will fall in line, because it's almost a little bit of a math equation. If I got a net 50 grand, then how much do I need to bring in to cover my variable costs, to cover fixed costs, to then net a dollar amount that is going to be the living that I need?
Okay, so JJ, talk a little bit about what the cost of doing business is versus just an expense.
And you guys bring up a great example here, and with Interstate batteries, and you said, well, we may not be the cheapest, we don't want to be the cheapest. Many small business owners get caught up in, well, if I got to make this profitability, then I got to have the cheapest, whatever it is, or the least expensive. And what we have to remember is what you're spending money on is a reflection of your business, meaning no one's probably with your customers per se going to say, well, I don't know where we went to go get that fixed, but because we had Interstate battery, we never had a problem. Now, that may be part of the conversation, but they're going to say, oh, you got to go to Al's automotive shop because we went there and they took care of us. They understood the problem, they fixed it, and more importantly, then we didn't have any issues for a long time. You want to be a small business owner that stands behind whatever it is that you're doing. Why? Because you want a return customer. You want them to speak highly of you. So you look at what's the cost of doing business. Well, the cost of doing business is the business that you're in. I'm assuming all small business owners want to provide the best that they possibly can. So with Interstate batteries, that's in part what they're doing. And part of what you were sharing earlier, that somewhat of the management system of the batteries can help the business owner, and it might free up some of the time that their technicians or mechanics or maybe some of their admin are having to track that inventory with maybe another company, where Interstate batteries is tracking that, knowing when to take things off the shelf, knowing when to replace them, and providing that expertise. And so what does that do? It's actually saving you costs over here. So you can't just look at the expense. It's kind of like you can't look at just the expense of your bookkeeper, just the expense of your tax advisor. It's got to be, okay, so what is it that they're causing me to do business better? So an expense is, okay, I gotta go buy a stapler, right? And I gotta get some staples. Does that matter to your customer, how you staple that and file it away? So there's an expense, right? A printer, right? But when we're talking about your employees, you're talking about what you're selling as a product that's going as a part of it, that's now part of your business and what your customer sees you as. And really at the end of the day, what does it all come back to? Right, we keep talking about you got to know your numbers, but why? Because you want to take care of your family, you want to take care of your employees, you want to take care of your customers, you want to take care of your vendors. So with that being said, what would help your business better? What would help you ensure that you're making money? You're not having to replace a battery later, or you have a customer that's not happy and they just happen to mention to somebody else.
Social media.
Yeah, exactly. And so you have to look at what's the cost of doing business. Well, what would be the cost of that customer not being happy, or they're having to return, or they go to somebody else because you didn't give them a superior experience?
We try to frame that up, because one of the things we do is we take our batteries off the shelf after 3 months and bring them back into our distributorships and recharge them. We do this, but it does come at an expense. And like you say, you don't have to be afraid to make a profit, right?
Right.
If you're doing great work or you provide great service, that comes at a price. And yes, they can find it cheaper somewhere else, but they're going to get what they pay for. It's kind of the way
That comes into play in my business a lot too. So if I want to go clean the windows in this $1 million house, I don't want to send a minimum wage employee over there to do that. We're starting out at $17 an hour for technicians, right? So that I have somebody that says, hey, this is a job that I can make a living off of, support my family off of, and I'm going to take that job serious so that whenever we are in a job site, so we do clean several $1 million homes. Sometimes we're using lifts around expensive buildings. I can't have that minimum wage employee that doesn't understand how to work yet in that position.
Mm-hmm.
So because of that, I have to price my jobs accordingly. Right? I can't come in as your low-cost window cleaner and provide that level of service and make those numbers work, because I won't be around next year to be your low-cost window cleaner.
And you might have needed to do that at the beginning, but now you're at a place where you can afford to charge more, pay people more, and still provide great service.
Absolutely. But you start getting some momentum, there's so many more things to think about. How am I going to grow this company?
How do I get the right help?
How do I get the right help? And hey, it doesn't matter how many sales you do, how great a service you are. If you don't know how to manage the money in the back end, you're not going to be here for very long, right?
Mm-hmm.
Whether you didn't pay your taxes because they knew that you didn't understand that, and the IRS is go, oh, well, you didn't understand, but they'll probably, you don't know it if you don't understand. I think that's the way they work, right?
Nope.
Oh, no. See, that's why you need a professional.
Yeah, there you go. Yeah.
Well, JJ, thank you so much. Tell us a little bit about your book, and then how we can connect with him on jjthecpa.com. You can see all his social channels. I really like your TikTok videos.
Yeah.
But tell us a little bit more about your book and where we can catch you at your seminars.
Yeah, well, I appreciate that. So JJ the CPA, really anywhere you look, hashtag JJ the CPA, or its name JJ the CPA, jjthecpa.com.
Mm-hmm.
And with that, I've got videos. I really kind of focus in on small business owners, those that are starting out. And with that being said, I try to put out videos that are helpful, but not really full do-it-yourself. They're videos for you to get ideas and then take them to your advisors.
Right.
And then this book here is on Amazon, but with that, bottom line is it's the top 60 questions that I've had from clients over my career, most of which don't have anything to do with taxes. So I talk through understanding your numbers and financials and cash flow and what your banker's role is and how to get a loan and how to find your advisor. And then some very fundamental ways to structure your business. And that's also pretty much kind of what a lot of my videos are on as well. So I appreciate the opportunity.
Yeah.
Honored to be a part of Proclinic and for Interstate Batteries. Kyle, thank you to you. John, appreciate you and putting in a good word with Kyle.
Yeah, such a
to bring
pleasure
me
to
here
finally
today.
meet you.
Yeah.
I've seen hours and hours of videos.
Well, I appreciate that, my friend.
This is awesome for me.
Yeah,
So.
well, I appreciate that. My honor. My
Thank you.
honor.
Thank
Yeah.
All right, thank you.
All right.
Look him
Thanks,
up
Kyle.
online, guys. We'll see you in the next Proclinic. All right. That was fun. Hey, everybody. I did not announce this at the beginning. Thank you, Mallory, for putting it in the chat. But please feel free to put questions in the Q&A tool down at the bottom of your Zoom, the Zoom window. We're going to take a few that have come in. JJ, are you ready? I know you're standing by live for this one. All right. But yeah, just drop your questions in the Q&A. We'll take a few that came in on the chat. What are some major tax changes in 2023 as compared to 2022?
Yeah, well, thanks for having me on today. It's a real honor. Great company, especially starting with your mission. Some of the big changes for 2023 are related to small businesses when it comes to writing off assets, the depreciation. So what we've been dealing with for a number of years is being able to write off 100% of business purchases, whether new or used. And starting in 2023, we'll be able to write off up to 80%. Now, the other 20% will be depreciated over time. That's going to continue to go down 20% each year thereafter. Now, when we are talking about small business owners, those that put money into retirement, more can be put in. So the 401k, the simple plan that small business owners will have it into play. Their employees can put in more, which also means the owners can put in more dollars, as well as then the catch up for those that are 50 and over. Down at the individual level, just a couple of things. One, that those that file individually and take the standard deduction, that is the highest it's ever been due to the inflation adjustment. So we are seeing a few clients paying less. Also, when we now look at a major change that we had in 22 as well as in 21, but we had higher credits related to childcare or child. And we also were able to get special deductions with charity for 2023 and 2022. We're back to those normal levels for tax credits, both for childcare and just the child tax credit. And so people are going to see a kind of a major effect related to that in terms of less credits as credits reduce down taxes dollar for dollar. But other than that, really the laws that we're dealing with have been in place since 18. The big key here, Kyle, is most small business owners, medium-sized business owners, it's easy to forget, but the actual typical number one largest expense on somebody's P&L, maybe outside of cost of goods sold or payroll, is taxes. And for those that have flow-through entities, it's paid at the individual level. Many times it gets maybe forgotten and it's seen as something just once a year. So what's key here is knowing where you stand early. So most of the clients that we work with, once we hit right after tax season, we want to start looking at 2023. So most will hang up their hat when we hit April 18th this year, and most will have a sigh of relief that taxes are over, and they'll worry about it next year. And for business owners, small, medium individuals, really it just begun, meaning once you hit May, you hit the summer, get an idea of where things stand. What did change, not only with the laws, but with your business. So with that being said, it's really understanding that the more money you can save in taxes properly, well, then the more money you have for your business, for your family, for retirement, for, taking care of the fact that you want your business to be around for years to come. Oh.
Am I on?
Hi, we've got, sorry, I was on mute for a second there. We've got a caller, a guest on the show. Tyler Staples had a question. I was going to have him ask you. Go ahead, Tyler.
So the question is, we have people in our group who are resistant to doing the employee retention tax credits because a CPA that a lot of us use is advising that that is going to open us up to being audited. Just want to get your thoughts on that.
You bet. And if you don't mind, I'm going to mention that I do have an instant access seminar on my website that you can go and you all could watch it as a group, but it's a 3+ hour seminar that walks you through the employee retention tax credit. You get a PDF, examples on how to prepare it. And here's why I actually mentioned that, Tyler, is that what I tell people that aren't clients of mine is go and learn about it yourself. Just listen to a seminar. If you don't want to buy the seminar, then you can go to my YouTube channel. I've got probably about 100 videos about the employee retention tax credit. And the reason I just mentioned all that is that anything that we do with the IRS is always open to audit. If you want to avoid audit, then don't work, don't have expenses, don't be a business owner. Meaning anytime we file a tax return, it's always open for audit, meaning the IRS can come like a referee and just ask for an instant replay and go, well, you did deduct this or you did take this credit. Can you just show us your documentation? And so we never take a position with a client in the last 30 years of, well, if you do this, it's going to open you to audit. For what I just indicated, we're always open to audit. The second is, I'm not quite sure. So all of you are using a similar CPA. And so I never want to be critical of another fellow tax professional. But I never really understand why that's an answer to anything when somebody inquires, should I do this? The other thing is that with the employee retention tax credit, if you qualify for it properly, well, so what if the IRS comes and asks? It's up to $26,000 per employee. Now, that is something that is going to be based on W-2 wages. It's only from the wages that you had from April 1st. From March 13th of 2020 to September 30th of 21. My point is did you have wages or not? Yes or no? Yes. Well, then the other is, were your gross receipts down? Yes. Well, then you qualify for the quarter. If your gross receipts weren't down, was there a governmental order in place signed that prevented you from being able to conduct business? Yes or no? So my point in saying that is that it does seem kind of cut and dry to me whether somebody qualifies for the employee retention tax credit or not. But that's money back to the employer. It does have a couple of rubs to it in the sense that it is a reduction of the deduction of your wages. But my point is really with any position, whether it's writing off a vehicle, should I pay myself more money as an owner? Should I put money into a retirement? I'm just going to be bold. I never respect the answer of, well, it's going to open you for audit. The thing to note here is that if the IRS were to come, they're not going to now want to knock on your door, not going to come visit you. They're not going to now, because you did the ERTC, want to look at all your needs. They're not going to come and do your kid's baseball game and intimidate you. So my point in saying all that is that I just don't know what the concern is if there is a quote unquote audit. If you have receipts, if you're doing things correctly, why would we worry about that? It's and I'll just say in closing to that, just to kind of give you confidence, and it's a way to have fun. And this is what my videos do on YouTube, is I would doubt there'd be any parent out there that would say, whether to their 5-year-old or 12-year-old, hey, listen, we're not going to put you in that soccer league. We actually don't want you to play any sports because there's an umpire, there's a referee, and they may call you out. They may watch you go to first base, and before you get there, something happens and they're going to call you out. And we don't want you to go through that. No one would do that, I wouldn't assume. So the IRS is nothing more than a referee. They're nothing more than an umpire. Many think they're there to get you, and in 30 years, never seen it one time where the IRS is there to get you. They're just there to do an instant replay. So if you qualify for this and you're able to get money back to help you and your business, and you're able to do it properly, I'm disappointed that the response is, well, it may open you to audit. I would have some more harsh words if we weren't on an Interstate Batteries Zoom related to that. But if you want to hear kind of me even go more brass knuckles on you, check out my YouTube channel to really maybe give you the confidence that if you qualify, then why wouldn't you do this regardless of what you're being told otherwise? So we haven't had one client get audited, but I'm also not worried if we did because we did it properly. So great question on that, Tyler.
And we posted, thank you, Mallory, for posting the link to the Employee Retention Tax Credit seminar that JJ does. You can click on that in the chat and sign up for his seminar. But we got kind of a shy group. We don't have a lot of questions coming in. Let's see. What's typically the best deduction for a business owner?
You know, I would say it's actually putting money into retirement. Now, one of the things is the first thing I hear from small business owners is, well, they'd rather invest back into their company with their profits. Well, what a better way to invest back into your company by investing into yourself, meaning for your future. Most small business owners, if I were to ask them, what are you going to do in retirement? They say, oh, I'm going to sell my business. And I say, well, how much? And everyone's going to probably say a cool $1 million, and that'll set me for retirement. And maybe that'll all work itself out. But along the way, taking some of your profits and putting it into a retirement plan for yourself is then going to allow that money to grow tax-free. It will be taxable when you pull it out, but you're getting the deduction now. And typically with small business owners, a deduction is going to be more valuable to them now versus in retirement. Why? Well, they're making more money as a business owner. So the best deduction is the one that didn't go to a vendor. It didn't go to advertising or a third party. It didn't go to buy an asset that's basically not going to be worth anything somewhere down the road, because all assets become old and depreciate. But when you're putting money into retirement, that's something that's going to grow. It's going to be there to help and ensure that you're able to retire. So you're using your own money in your own business to put money into retirement to get a deduction for that. And then you also can do a match. So for small business owners, they also will say to me, well, I think I can make more money in my own business. And I say, I don't doubt that at all. Because many think if you put money into a retirement account, whether that's a IRA or a simple plan or a 401k, that it has to go into the market. Well, it doesn't. Quite frankly, it can just sit in the account. You can open it at a bank and just sit there. It could be in a money market. It could be in bonds. It could go into real estate. You can have plenty of options with that. So I tell people it's not an excuse. I tell my clients, it's not an excuse that you don't want to go into the market why you're not putting money aside for it yourself. The other aspect is that for small business owners, medium business owners, to compete now as trying to keep your employees by having a retirement plan with your business, you're able to now provide this benefit to your employees. And here's what many small business owners don't actually know, because it's a little tricky, is that if your employee doesn't participate, meaning they don't put their own money into the plan, then most plans don't then obligate you to put any money in, because you can only put money in to match what they're doing to the extent of what they're doing. My point in saying that is that many small business owners that I work with, because my average client is probably 10 employees or less. It's probably a couple million in gross or less. And with that being said, most of the clients that I have are going to have a retirement plan. And what's interesting is that maybe only 1 or 2 of their 10 employees actually participate. And so my point in saying that is that that's kind of another excuse I hear, Kyle, is, well, I don't want to necessarily set up a retirement plan because then it's extra payroll cost. And what we have to look at here is any cost that you have in your business, what is that net cost after the tax savings? And so anyways, that's why I think it's the best tax deduction, because it's actually going to benefit yourself and in the future.
Well, I would also think, everybody in the automotive industry, especially right now, and most industries, is struggling with employee retention.
Yeah.
Especially keeping good trained technicians around and being able to offer that some retirement savings for them would be a fantastic benefit. So
absolutely.
Yeah. Let's see. We had a question around the best tax structure for a small to medium-sized business.
Now this one here is a tricky one because everybody's got a different opinion. It's kind of like everybody has a mouth, right? So everybody's got a different opinion. And with that, there could be some variables depending on what state you're in. But I'm going to tell you, 99% of the time, what small business owner, medium business owners don't actually understand, and it's not because they are dumb, it's because they are in those that are here typically, they're in the business that they are in. They're taking care of their customers, whether it's window washing, as we had talked about during the seminar, or it's automotive, or it's repair, right? That's what they're the expert in. They're not expected to be an expert in tax and accounting and structure. But what is very important, though, is to have some basic understanding. So the first thing I mentioned, everybody, is that there's really 2 things that come into play here. One is you have a legal structure, and the entire purpose of a legal structure is to protect you as the business owner from your business, meaning liability protection. Now, separate and distinct, and this is where many actually maybe lose the connection. And I'm talking about even bankers and attorneys and financial advisors don't really understand why it's a big mystery here. But here's the big aha, is that your legal structure typically has nothing to do with then how you will select your tax structure. So typically, especially in today's environment, businesses are LLCs, limited liability companies. And in most states, that's going to give you the best limited liability protection, meaning it's going to protect you as the owner the best, if you will. Why? Well, it just depends on the state, and that's where you can talk with an attorney. I'm just telling you that's the fact of the matter. Then you look at, well, then how should I be taxed? And what I tell small business owners, why don't we select a tax structure that's going to result in the least amount of tax? What a concept, right? So with the least amount of tax, for those that probably are the majority of those tuning in, that would be, let's say, in the service industry, automotive industry, meaning they're doing two things at once. They're involved in their business, taking care of customers, showing up every day, working hard, buying products, selling product, right? So with that being said, most business owners in the audience, I would assume, are actively involved in their business. So if you're actively involved in your business, then it would make sense to be taxed as an S corporation. This is not something that you decide when you set up your business with the state in which you're in. It's only something that you decide with the IRS. Now, an S corporation files a separate return. You basically then have this one major advantage over an entity that's taxed as a partnership or somebody that is a sole proprietorship, meaning they're not filing a separate tax return. And here's what it is. The net income from an S corporation is going to be taxed down at the individual level, but it will not be subject to self-employment taxes. That's an extra 15.3% tax. If you're actively involved in a partnership, which is the other tax structure, well, that net income, if you're actively involved, is going to be subject to this additional tax, this additional 15.3% tax. If you're a sole proprietor, meaning you're not filing a separate return, that net income is going to be subject to this extra tax of 15.3%. So the S Corp is going to help you avoid that. Now, let me tell you, where's the rub on it? Well, the rub is, but what I like about this rub is that the small business owner gets to control how much this rub is going to give them a rash, how much this rub is going to cost them. They get to decide. When you're a partnership or a sole proprietorship, you don't get to decide anything because that tax is going to be simply added on to whatever you net as a business. So when you're an S corporation, that net income, you look at that and you go, well, how am I going to get that money out for myself? Well, you're going to do it in one of two ways. You're going to pay a distribution to yourself. It's not tax deductible, but here's where the quote unquote rub comes into play, is that you're going to pay yourself a wage. And when you pay yourself a wage, a W-2 wage as an owner, well, it's going to be subject to payroll taxes. And out of that payroll, you're going to have 7.65% withheld, Social Security and Medicare. And your business, your S Corp, is going to match that 7.65%. Add those two things together, and that's a 15.3% tax. Wait, hang on a second. I thought you said the S Corp is going to save me this 15.3% tax. Well, it does, but you get to control how much of your income is going to be subject to that. So if you're a sole proprietorship or an S corporation and you net $140,000, then take that amount times 15.3%, and that's a big wallop slap in the face amount of tax that you're going to pay in addition to your income taxes. Now, when you're an S corporation and you net 140,000, well, you're going to pay zero of that self-employment tax. So if somebody's netting 140 grand and they say, well, I'm going to go ahead and pay myself a wage, let's say of $100,000. Well, that wage is going to be deductible. That means that business that was netting 140,000 after you would deduct the 100,000 in wages to the owner, then is going to be a net 40,000. But see, on that 40,000, you still save 15.3%, which add that up, we're talking about $6,000 a year. Most small business owners, they plan to be around for 10 to 20 to 30 years. You save $6,000 a year as a very minor example. Over 10 years, that's 60 grand. Over 30 years, right? We're talking what, $180,000. So unfortunately, there's a lot of tax advisors out there that are lazy. And I don't mean to criticize them, but I don't know any other way to say it. And they tell people you don't want to be an S corporation, and they give them all these host of reasons. And what I just tell people is, then tell that advisor you would like them to do the math for you. You want them to do their job and say, if you don't want me to be an S corp and you want me to continue to be a partnership or sole proprietorship, then will you show me what you're talking about? Put it in black and white. And if somebody knows what they're doing, they can work that on a napkin in 5 minutes. So if you're dealing with a tax advisor, they can't answer it, or they tell you that you need to put your head in the sand, or whatever the case is, it's going to open you for audit. It might be time to find a new tax advisor. So as you can tell, I'm passionate about these things. And one thing I'm just going to mention, Kyle, I haven't taken on new clients since 2018. So I'm not even trying to find new business when I tell people, maybe you need to find a new tax advisor. So the reason I'm passionate about this, Kyle, is that there are so many small business owners out there. They are working it to the bone. They're working 6 days a week. They take it home. They shower with it. When they're watching their kids play, they're thinking about it. And what I want is that that business owner is rewarded by keeping as much as they can for themselves, for their family, for the future of their business. So with all things, it's all about finding a good balance to that. So I gave a pretty simple example where somebody still is going to pay a reasonable wage. And so I say that because many times, as I indicate in my book, I just want to give people ideas to go back to their advisor. And what I tell people, how do you know if you have a good advisor? When you go and ask them a question, they don't tell you the answer is, you don't want to do that because the IRS is going to audit you, or you don't want to do that because it's not allowed. A good advisor is going to say, well, let me ask you a few more questions, and then let me now walk through with you the pros and cons. Let's make a decision together. Many small business owners think, well, I would rather have an advisor that just tells me what to do. And I usually say to small business owners, are you kidding me? Where in your life do you just let somebody in your business just tell you what to do? It's your business. And as we were talking about during the seminar, small business owners, you have your fingers sifted in your numbers, in your parts, in your employees, with your customers, showing up, turning the open sign around and getting in the cash register and making a deposit and going to get postage and following up with the customer that's not happy and the employee that wants time off. What are we doing all that for? Give yourself permission. You're doing this to make money for yourself, for your family. And when you make enough money and you pay the least amount of tax properly, then guess what? Your business is stronger. What's the benefit of having a stronger business? You're around tomorrow to pay your employees. You're around next year to take care of your customer. You're around 6 months from now to take care of your vendors. A strong business is a business owner that's paying attention and has owners or has advisors working with them that are helping them understand their numbers. Because if you don't know your numbers, you don't know your business. And so with that being said, really the bottom line is, as I go through that structure, I look at that as the pinnacle part.
Yeah. Well, you've got a lot of fans on here. You preach, coach. Do you, I know Tony's posted in the chat a couple of things here. Do you know him, or is he just a fan?
Yeah, no, I do. Yeah. Thank you so much, Tony D and Tyler. Yes.
Awesome. Yeah. Tyler mentions they had about 25 employees and less than a third participate in the 401k. And he had to work pretty hard to make that many, to get that many to participate. That's a shame, but it is an option, and you've got it out there. So we've posted, like I said, we posted the chat. Everybody make sure you follow JJ on YouTube. Got a couple minutes if anybody has any more questions, but otherwise check out his book. And Tons of videos. And you covered something a minute ago that I was like, I heard that. Where did I hear that? Oh, it was in a TikTok video. Just so nice and easily digestible, but
Well, I appreciate that, Kyle. Well, I think really for your audience, right, they've taken the time to tune in, and you guys are such a great company. It's been such an honor to be a part of this, and I appreciate the invitation.
Oh.
So much respect. And I just have so much respect for small business, medium business owners, large business owners, anybody. And when the reason I get fired up and passionate about it is because I love what I do. And I feel small business owners, sometimes they just need that extra confidence to then go back to their advisors and go, could you just explain it to me one more time? I'm paying you, so help me understand what is it that we're doing. And it's okay to challenge your advisors, because a good advisor looks at that as exciting. So my clients, we're in contact all the time. They're following up with me and saying, hey, I'm thinking about doing this, or I heard about that. And we walk it through. And with that being said, hopefully what's come through here is that it was worth their time to come and listen, maybe got some good ideas to maybe take back to their advisors.
We have to wrap it up in a couple of minutes, but we had just one more question come through. We can do it in 3 minutes. When do we incorporate? Is it based on level of income?
Yeah, great question. No, it's not based on the level of income. I tell people, if you're starting a business, immediately incorporate, put that liability protection. And then if you plan to be around, well, then there's no reason to not start looking at then how do you want to be structured. And if you're actively involved, if I have a client and they're setting up a new business, then we're going to go right into setting them up as an S corporation and get right into that. If I have somebody that says, well, I'm not sure if I'm going to do this long term, might be just kind of a side gig, I'm going to see where it goes. Well, then maybe it wouldn't make sense to put together a tax structure and the payroll and all that. And you could just file as a sole proprietor. But I would say to that income level, my thought process is once a business starts to net about 20 or 30,000, you would at least want to start having the conversation. Yeah. Should I be filing as an S corporation? Because that's at the standpoint where maybe it starts to get more real.
And right now, be finding a good advisor, right? Somebody that's got experience in your industry, somebody that takes an interest in your business. You mentioned like they're quick to respond to an email, even if they can't meet right away, they're responsive. Right. They want to ask you more questions about your business, not just, tell you what their billing rate is or something like that. Yeah. Awesome. Well, thank you, everybody. Thanks, Alyssa, who just said, especially you, JJ, you're the best.
Thank you, Alyssa.
Thanks for tuning in. And we will be replaying this in a month. So look for invites to that. And please forward it to your friends and colleagues, coworkers. Let them participate. And we look forward to seeing you next time. JJ, thank you again so much. It's been a pleasure.
Thank you.
All right. Take care, everybody.